everyone, Buffy the Rate Slayer here, and welcome to the latest episode of our weekly Market Insight series, which comes to you directly from our capital markets trading desk right here at SunWest Mortgage Company. Let's get to it. Stocks on Wall Street have bounced back after last week's sell-off. The rally was boosted by earnings reports and the FOMC's dovish tone. Treasuries also rallied this week as investors see the economic data supporting the Federal Reserve to be able to commence softening its monetary policy. Meanwhile, the U.S. Treasury announced no change in coupon auction sizes for the coming quarter. The FOMC signaled at the end of their two-day meeting that it is open to the possibility of rate cuts. Markets are now pricing in 2 rate cuts, with some traders even seeing the possibility of 3 cuts before the end of the year. On Wednesday, the Federal Open Market Committee voted unanimously to leave the benchmark federal funds rate in a range of 5.2% to 5.5%. The move aligned with expectations for no change in policy at this meeting, while setting up a potential move at the September 17th-18th meeting. The committee signaled in its statement that they are closer to reducing borrowing costs unless progress stalls on getting inflation back to the 2% target. In his press conference, Fed President Jerome Powell hinted that while no decision has been made, an interest rate cut could be on the table for September if the economic data showed inflation easing and further cooling of the labor market. The Federal Housing Finance Agency Price Index showed a rise of 5.7% in May from a year ago. Prices remain flat from the previous month. Job opportunities are slowly disappearing in the U.S. According to the Bureau of Labor Statistics JOLTS report, job openings in June declined to 8.2 million from an upwardly revised 8.3 million in May. Even though the figures beat economists' expectations of 8 million, it was the second lowest monthly total seen so far this year. The Employment Cost Index, which measures wages and benefits, increased by 0.9% during the second quarter. It was the slowest pace of growth in 3.5 years, providing evidence that inflation is on a downward trend. According to the latest ADP report, private growth slowed down for the 4th consecutive month. Private sector employment rose by 122,000 jobs in July. The figure is much lower than the expected 150,000, and it is a step down from June's revised 155,000. Annual pay was up 4.8% in July, the slowest pace in 3 years. Pending home sales surprisingly increased in June. The National Association of Realtors reported that the amount of home buyers who entered contracts rose by 4.8% from May. It was the first increase in pending home sales in 3 months. The results were much better than expected as sales were boosted by rising inventories. The number of homes for sale has risen throughout this year. In June, there were almost 23% more home listings compared to last year. Transactions were still down 2.6% from a year ago. MBA mortgage applications were down by 4% for the week ending July 26. Refinances fell 7% from the previous week, but rose 32% year to year. Purchases declined 2% weekly and sank 14% versus the same week last year. Mortgage rates barely changed during the week, with the 30-year fixed mortgage rate hovering around 6.8%. Borrowers may be waiting for signs that mortgage rates will drift lower as the Fed begins to cut short-term rates. U.S. initial jobless claims rose to the highest level in almost a year during the week ending July 27th. Initial applications jumped by 14,000 to 249,000 during the period. Continuing claims rose to 1.8 million for the week ending July 20th, its highest level since November 2021. The labor market seems to be cooling down to pre-pandemic levels as hiring has slowed and the numbers of Americans seeking and receiving unemployment benefits is rising. This, of course, after hovering near historic lows for the past 2 years. In international news, the Eurozone GDP rose 0.3% in the second quarter, beating the 0.2% forecast. The Bank of Japan raised its benchmark interest rate above 0.2% on Wednesday, acting to curb the yen's slide against the US dollar. On Thursday, the Bank of England cut rates for the first time since 2020 after a narrow vote. The BOE lowered rates by 25 basis points, but offered no guidance on future moves. That's it for this week. If you like this video, please hit that like button. And as always, stay updated with our news as our trading desk will keep informed with our pricing incentives. Have a fantastic weekend, everybody. Buffy out.